Hello everyone, hope you're having a great weekend. This is Andy here, one of your moderators in Forex Fire. I want to bring you some homework this week. That's the average daily range and the average daily range and why it's important and why you should use it as part of your trading for this week anyway. So the homework, you'll see on my screen now, I have the average daily range set out. Now you should all have this indicator on MT4. If you've not, just reach out to me and I'll be able to get you this. So the average daily range is based on 14 days, taking the high to the low, past 14 days and giving you an average, okay? It is an average daily range, it's not a unique daily range or an actual daily range, but actually an average. So it balances itself out, okay? So why is that important? So if you're taking your whatever trade pair that you're taking, if you're saying, the odd CAD moves 65 pips, the odd chef moves 50 pips a day on average, you'll notice down here that let's see, the maximum you'll probably get out of this, the GN moves 157 pips a day, okay? That's 157 pips per day. Whereas the lowest one there is probably the Euro Chef. The Euro Chef moves 42 pips a day, it's a third basically. So you're going to get more movement in the GN than you are ever in the Euro Swiss, okay? So with that information, this is one of the other indicators I gave you. Just move my face out of the road here. The other indicator, this is the GN. So the GN is shown here. There was a video done on this, and I'd encourage you to go back and look for that video if you've not looked at it yet. But basically what this tells you is over 14 days, anytime it hit the blue, that means it's within its range. Anytime it hit the red, it didn't actually meet its maximum range. Over here, it gives you a percentage of what this actually done. So if you look through, 0 to 10%, 100% of the time, it will reach it. Generally, it would. 40 to 50% of the time. So 50% of that 157, 160 pips. So it reached 80 pips 50% of the time, and then it starts to come down, okay? So 50 to 60%, 96%, 70% is 88% of the time, 80% is 70, and so on, right? And when you get down to 100%, the full box, it only reaches a full box 31% of the time, okay? So that's the most ADR. So that's the maximum 157, okay, of all the pairs, the 28 pairs. The weakest one was the Euro Swiss. So the Euro Swiss, which is here. So the Euro Swiss, because it's in a limited range, it's only 42 pips, not 157 pips. So the 42 pips and the percentage of that, you'll see that it actually gets a lot more than it was in the other one. So it was only 30-odd percent, 100% of the time on the GN, whereas this one, because it's smaller pips, the 100% range is 50% of the time it'll hit the 100% of 42 pips, okay? So going on to the chart. Sorry, that's the strength meter. We will get onto the strength meter in another homework exercise, but we'll trying to concentrate on the ADR first, okay? Okay, so the ADR, let's go here. So what I do is I project them onto the chart from that skin day. Before I get to that and show you the homework, I just want to show you the ADR and why it's important, right? So there's the GN. So the GN is 160 pips, now it's 157 Monday, okay? So I've not drew that box yet. But I want to show you, just guide you through this, right? So this is the Friday, Thursday, Wednesday, Tuesday, Monday. Now you don't need to do this. I'm just showing you this for a bit of time, okay? But it shows you that it stays within its average daily range. Why is that important? Because if you're trying to project a price for a TP, you want to make sure that you're within the average daily range to give yourself the best probability you can of getting your TP. Sorry, just turn this off. Oh, back here again. Right. So this is what I've been doing every day and just adding on an additional ADR box. The ADR box we'll get to in a bit, but you'll see that just going through this, right, it stayed within its range. Some days it'll meet its maximum point of the range and then fell away. This one came up, top of the box, bottom of the box, again, stayed within its range. This one here stayed within its range, top to bottom. So you've got to remember, right, the average daily range, every day it drops off to a different number. Okay, it won't be much, but it will be within 10%. So this day it was 150, this day it was 157, 157, 158, 158. That's because there's a day dropped off. It's the last 14 days, okay? Now this day here, something happened this day here. Fundamentals in the market will change this slightly. Not excessively, slightly, okay? Where you will push through your ADR box. It happens. Doesn't happen all the time. Why does it not happen all the time? We go back to here, we go to the GN. Oh, GN. You can actually see it's from back here. It stayed within its box, slightly outside its box, in its box, in its box, and about slightly out, actually excessively outside its box. So whatever fundamentals were in the market this day, it really pushed outside. But what did it do the next day? Came back in its box, pushed back out. Fundamentals in its box, in its box, in its box. What I'm trying to get you to focus here on is a range that you can work with each day, okay? Some people get to the charts and are overwhelmed with a lot of stuff, and oh, there's a high up here that was way back in March 2017. That's got to be a demand or a supply or whatever it is, right? Support and resistance, retail, right? Whatever. But it's well outside your range. So you should never be looking at that for tomorrow. You should be looking somewhere in, or next to where your actual range is. Gives you a better TP. And it gives you a better chance of hitting that TP within the same day. You don't really want swap fees and everything else for your MT4. Okay, so another reason. So going back here again, so I think we're getting the picture here, right? So we're within a box. I'll just, sorry, go back out here again, and I'll just show you, just going through these, right? So they're all kind of within the range. All within its range, all within its range. It's gone. Sorry guys. Fire block. This was something John had shown you, fire block. That's for another homework exercise. Came in, hit the 50% and pushed away. Anyway, it was within its range, it's ADR, okay? That's what I'm trying to show you here. ADR, ADR, ADR outside, okay? So I think you get the idea of the ADR box. Another one, G-odd, just to show you. So G-odd moves 125 pips. This thing again, within its range, within its range, within its range. These things stay constantly within the range every day, okay? Sorry about this. Oh, my alarms are going off. Okay. Now the homework. Side here. So the homework, if you go to, actually, let's just go to Eurochef. So what I want you to do is put these boxes onto TradingView. Let me show you that. Okay, 1 second. So for the homework, I want you to draw the average daily range boxes from MT4 information. So the GN, we know the GN is 157 pips, and we're going to take the Euro Swiss because the Euro Swiss is the lowest. So we're going to get the biggest range, the GN, and the lowest range, the Euro Swiss. And we're going to draw tomorrow's boxes, and I'm going to show you how to draw them properly, okay? Okay, so we go to our TradingView, go back up to GN. Okay, so we want to draw a box of 157 pips. So get the box item out, draw a box. We don't know the size of that yet, so let's just put your measurement tool in, 157, roughly there. Okay, draw a line. Draw lines from there to there. Bring your box down, okay? So that there is a box that's 157 pips. Right, 157 pips. The box starts at 10 o'clock. So we move him over. See down the bottom here, showing you here the time. So 10 o'clock box. Just stick it there for a moment. We want to put on it. Well, this is what I like to do, right? I like to put on. So the ADR equals 157 pips. Okay. Tomorrow is Monday, the 24th of May. This month's flying on. Okay. Now the idea with this is that you've got to start your box. See, you don't know if the price is going to go up or down yet. Okay, we've not looked at higher time frame. We can get an idea of the bias, but we don't know for sure. So what we do is we work within two ranges, and the two ranges would be starting at 10 o'clock. So it started here and pushed up. See that? The blue candle, it pushed up. So this was the start at the bottom. So we put it at the bottom here, and then we copy it. Okay, copy it and push it up there. Doesn't need to be exact, all right, just roughly. Oh, there we go. Okay, so this is a range to play on. I'll just take one of them away. Don't need that. Okay, so this is a range we're playing on. Okay, now we need points of interest. So we don't need the points of interest that are way out the zone. We don't need things that are way up here, and we certainly don't need things that are way down here, because the likelihood is it's going to play within a range. So what we do, or what I tend to do, is go to my daily. Let's see, I've already been practicing a lot of this stuff here. So if I go to daily, I'm looking for an order block. So there's an order block. So we draw in a line. This here is an order block. So that there is called the daily order blocks. Just call it DOB. Okay, so there's my first point of interest, and nothing really else. So let's go to the 4 hour. 4 hour, let's see what we can see. Actually, where is... So here, yeah, there was nothing a long time ago. Nothing really there. So there's not a lot up here, to be honest. Looks like price could push down. Is there anything else here on the 4 hour? Yes, there is. So we have another order block here for black candle. Okay, so this is a 4 hour order block. 4 hour order block for this doji candle here. In actual fact, it's a doji, so I should actually be labeling it as a 4 hour doji order block. Okay, 4 hour doji order block, and that will do it. And then go to the 2 hour. 2 hour. So we have this doji order block as well, but we have a 4 hour doji order block, and now we have just after that a 2 hour. So, you know, just leave it as a 4 hour is fine. It's actually a 2 hour and a 4 hour doji block. Still nothing to the upside. Yeah, no, that's all I can see there. There is, let's just point it out here, we have that there is a demand zone before the price pushed up. See that? First to draw in this, then you would get your 50%. So let's leave that there because it's shown as a demand zone or a banker's candle. Okay. So the idea, if the price did come down, push through the 4 hour doji and the 2 hour doji and the daily order block, which is very significant and very hard to push through. But if it did, then, you know, we're looking at the very bottom of the box, which could, you know, rebound and get a reaction off of this, hopefully the 50%. We won't know until we see what the price is developing on the Monday, okay? And then the last one, we'll go to the hour. So I don't go anything below the hour. Or you'll just end up with lines all over your chart, just like a retail support and resistance. You don't want that, okay? So the 1 hour is not really showing us anything. So for this up here, I just want to go back here a second and find out what the last up before the down was, because it could play a significant role for tomorrow. Looks like no, I just want to point something out here, right? This here, the last up before the down, okay? So that was this guy. Last up before the down. Line. So this would have been a supply zone, okay? This is your supply zone, and it's hit the 50%. See this candle here? It's amazing. This actually went right to the 50% of the banker's candle, or the actual supply zone. Look how accurate that is. Okay. Just to take note, what I'm trying to say is, whenever we get a point that's actually mitigated, it usually that's it done. It won't go back into that area. It can, but usually when you see something as precise as that, means the thing's been mitigated and price action resumes. It means the balance of price has actually happened. So will it go back up there? It's possible. So let's just, for now, for talk's sake, let's move that forward, and we'll use this as part of our zone. So let's just highlight this here. Let's give this, isn't it? Okay. Put out. Okay. Okay. So now we are back on the 1 hour. We have points of interest above and below. Okay. So what we're trying to do is we're trying to establish where it's going to go. Once we establish tomorrow where this price is heading, it could just come up, bounce off of here, and then head straight back down again and play within its box. And once the price starts moving, you can simply delete one of the boxes and then move it around the price action. Okay, so if it did come up and bounce into the 50% and then back down again, then you would be then playing within the box. And if it did come up and actually hit the 50% and bounce back down, this could be your TP, the 4-hour doji. Okay, because it's playing within its average daily range. Okay, so I'll just go back here a second. There's our two boxes. There's a points of interest. So that's for GN, a GN that moves 157 pips on an average daily range. Okay, now let's go to the Euro Chef. So the Euro Chef moves 42 pips. So let's draw a box. Draw a box. Let's put roughly there. It doesn't need to be exactly accurate, right? It's going to be there or thereabouts. So this is 42 pips. We just move that down onto the line. Okay, so now we have a box of 42 pips. I like to put on it the ADR equals 42. Oh, there are capital letters. ADR equals 42. And today, or tomorrow, I should say, is Monday. 42. Monday, the 24th of May. Okay. ADR equals 42. And it's Monday, the 24th maybe. Okay, there's your box. Where does the box start? The box start at the reset. The reset is 10 p.m. GMT. So GMT, 10 p.m. and it moves 24 hours to 10 p.m. GMT. So 10 p.m. GMT is right there. So there is your box. Where does it start from? It starts from where the candle started at 10 p.m., okay, which is there because it opened up and moved down. The other one, it opened up and moved up. We always start from the 10 p.m. candle. So that means it starts there and moved down. So that's the start. We copy the box. Copy the box. Okay. You can take that off just now. Okay, we're looking for points of interest. Let's look at the daily. Zoom into the daily. Points of interest. It's a bit big for demand zone or supply zone, I should say. Anything else here? No, so there's nothing in the daily. 4 hour. The 4 hour. No. Nothing in the 4 hour. The 2 hour. Nothing in the 2 hour. The 1 hour. Not really. Top of the box, bottom of the box. See, I would have picked this one, but it's been mitigated. Price just blew through that. Probably a signature there. Moved down on the lower time frame. So this is the thing with the lower number of pips. It doesn't give you a lot to play with, okay? Just zoom in here a second. This is way back on February. Possibly here. %50 of an order block. Okay. So we have a point here. It's actually outside our box, see that? So that's no good. We need to be inside that box there. So let's just go back in here. We want something in this area. Okay, here's something interesting. So we also have IPA in here, okay? So price has pushed past all this and left a footprint that's never came back. So this here, so there's a wick. Actually, yeah, that's better. So just close that a second. Sorry. Okay, so I'm looking at IPA here. See how the candle, there's a gap there. So here's our IPA from this point to the very top of that wick. The wicks tell a story, okay? So that is a magnet for price. If we go all the way back out again. That is a magnet for price. I like to draw my magnets on. Okay. Okay, so now we have Euro Swiss, 42 pips. So ideally what we're looking for is the price to come down, hit our IPA, and rebound and push the other direction, okay? We can only play within that range. So it looks as though it'd probably come down and then bounce up. If it was to gain strength in the euro, then it would push up this direction. If it did that, come up to these recent highs, you know, somewhere in here. Be looking, there's banker's candle there. Probably into this range here and then pushing back down, okay? But remember, you're only playing within a 42 pip range. So wherever that ends up, you'll delete one of those boxes and then you will move this other one around the price. Okay, for wherever it's going. So it could go up and play within this range, or it could move down tomorrow and play within this range. 10 o'clock, 10 o'clock. So the idea is, for your homework, you draw the boxes for tomorrow for GN and Euro Swiss, one being 157 pips, 2 boxes, one being 42 pips for Euro Swiss, and then start looking at those ranges throughout tomorrow and see how the price reacts within that range, okay? If it gets to a point and reverses, look to the left. Look to the left to see if there's any kind of points of interest that we may have missed. It's possible I've missed something here. Maybe something in the lower time frames that you find, but there will be something there that caused that response return reversal, okay? So that's your homework for this week. It doesn't need to be tomorrow. It could be any day next week. Draw your boxes, show you know, the boxes for each one for GN and Euro Swiss, so I can see that you're actually getting the boxes, and then before and after. So after would be, you know, actually showing the price range the Monday or whatever day it is you're doing, and delete one of the boxes and then put the other box over the price, okay, top and bottom. So it lets me know that you get it, that you're actually seeing within the range of this average daily range playing out, okay? So I hope that helps. Reach out if you need to talk to me or ask me any questions regarding this. I've tried to keep it as simple as possible, but I really want you to get the idea that the average daily range is something that's going to help you in your trading, and give you a more realistic take profit to aim for within that day, rather than some point of interest that's way outside these boxes. Something that's way outside those boxes may get there, but it may take days or weeks to actually get up at that range. And this will narrow your focus on where you should be. So I look forward to seeing the homework, and thanks for stopping by. And hopefully I'll be coming up with some more of these videos soon. Okay, thanks very much and enjoy.